Hello, everybody. Welcome to another edition of Zarina asking Tchaikovsky to help, asking the accounting professor for some help. And so here I'm delivering once again. All right. So intermediate accounting 17th edition, we're going to be walking through exercise 22-16 plus a WileyPLUS homework question. Intermediate accounting 17th edition authors Kiso, Weingarten, and Warfield. The question used in this presentation is copyright 2019 by John Wiley and Sons. All rights are reserved. This is for educational purposes only. I don't know why else you would use it. Video may not be distributed or redistributed without the express permission of Wiley. The solution presentation is copyright 2019 to 2023. Oh my God, I even messed that one up. By Bennett Tchaikovsky, all rights are reserved. The opinions contained within this presentation are myself, not the authors of the textbook or of Wiley. Let's take a look at this question. This is a relatively straightforward, just in terms of entries. Just kind of like remind yourself, like in terms of how this kind of works. So here's your book. And what this is basically going through and asking for is we've been asked to engage in a review of the financial statements. And this is the question that Zarina wanted me to do, which obviously is coming from WileyPLUS. So we've been engaged to do the review of the financial statements of Grishko Corporation. In the course of our examination, we conclude that the bookkeeper hired during the current year is not doing a good job. You notice a number of irregularities as follows. Year-end wages payable of $3,400 were not recorded because the bookkeeper thought they were immaterial. We don't want to not record wages. So 1231 X1, when I'm going through and I owe my employees money, we always want to pay them or else we're going to be in very big trouble, right? Assets equals liabilities plus owner's equity, ERDC, right? Not DC Comics, but debit credit. If I have wages payable, right, I'm going to have salaries and wages expense of $3,400. I'm going to credit $3,400 to salaries and wages payable to record accrued salaries. That's what I'm going to go through and do for this particular one. For the homework question you wanted me to go through and do, this is the same one, but it's for Carla Corporation. This one over here, this is going to be 3640. So same thing, right? So over here. So next one we're going to go through and look at is accrued vacation pay for the year ended was not recorded because the bookkeeper had never heard that you had to do it. Well, sounds like they took accounting someplace else and not at IVC. So what we would go through and do is we would again record salaries and wages expense. We would go through and record this for the amount of $31,100. And what we would do is we would credit some sort of accrued liabilities, or you could even do salaries and wages payable, right? Something, an accrued liability, meaning that we have to go through and accrue for it to record accrued vacation pay. Okay. So for kind of going through and doing the same thing for the other question that you have to go through and do, you would now do this for $28,500, $28,500, accrued vacation pay for $28,500 was not recorded. So again, same question, just different numbers. Okay. Insurance for a 12-month period was purchased on November 1st for the year was charged to insurance expense in the amount of $2,640 because the amount of the check is the same every year. So what they went through and did was they recorded insurance expense for $2,640. However, this is incorrect. Why? Because what they should have done is they should have recorded prepaid insurance, right? So when we're doing adjusting journal entries, we have to go through and say to ourselves, what's the correct amount of the insurance expense at the end of the year? So what we would do is we would say, well, $2,640 was the amount of the policy over 12 months. The policy, the monthly expense should be $220 per month. So the amount of the expense I should have on my insurance expense account is not $2,640 at the end of the year. Rather, it should be $440. Where are we getting $440? 11/1 to 12/31, or 220 times 2, right? So in order to get from 2640, I need to go through and credit insurance expense for 2200. So what am I going to go through and make that adjustment to? I never touch cash, but rather this is going to be prepaid insurance. Why is it prepaid insurance? Because as of December 31st, I still have 10 months of coverage left, or from January 1st through December 31st. 220, which is my monthly policy amount, times 10 gives me 2200. You could have also gone through and done this question by reversing out the entry, but what you would have done would be you debit prepaid insurance, credit insurance expense. Then you'd go through and basically debit insurance expense for $440, credit prepaid insurance, but you're going to end up with the same amount. Remember, after we do adjusting journal entries, the expenses have to reflect what we've used, and the assets have to reflect the future economic benefit. So let's take a look at it for this one over here. So this is for 2412. Okay, so if we take 2412 divided by 12 times 2, we get 402. So again, 2412 divided by 12, this gives me a monthly insurance amount of 201. 201 times 2 is 402. Too bad it wasn't 210. We would have had 420 and it would have made this problem more exciting. But so the journal entry I'm going to go through and use in both of these cases on 12/31/X1, I'm going to be debiting prepaid insurance, crediting insurance expense. So that's what I'm going to go through and do for both these. And this is going to be to go through to adjust insurance expense. Okay. So let's go through. We'll copy this down here and do the same thing here. This is going to be 2010. And there you go. Okay. So now the very last one over here is a little bit more interesting. Okay, so let's just kind of go pull this down here. And let's take a look at this one. Okay, so the reported sales tax revenue for the year is $2,120. This includes, it's going to be $2,120,000. This includes all sales taxes collected for the year. The sales tax rate is 6%. So let's talk about that really quickly. What should have happened is when you go through and record sales, when you go through and collect it, you're going to basically debit cash for the amount of the sales. You're going to show the sales, and then you're crediting sales taxes payable. Remember, when we're doing sales taxes payable, what this really represents is we're collecting the cash for the state of California. Clearly, this is not the state of California because there's a rate of 6%. And we know that California is significantly higher than 6%. So what they went through and did was they put everything over here to sales revenue. So what I need to do first is the first thing I need to go through and correct is sales revenue, because I should not have included the sales taxes. So what I first need to go through and do is to say, okay, my sales revenue right now is $2,120,000. And this includes sales tax of 6%. So if I divide this by 1.06, I'm going to get a total of 2 million. Check my work. I'm going to take 2 million, multiply that by the sales tax rate of 6%. This is going to give me 120,000. When added to this, this gives me the full amount. Always check your work. Very important. So my sales revenue right now had a balance of 2,120,000, but it should have a balance down here of 2 million. So what am I going to need to do to get this to basically balance? Well, I'm going to have to debit sales revenue for 120. And what I should have recorded was sales taxes payable. And this would have been for 120,000. So for the first part of my journal entry, 1231X1, I'm going to go ahead and debit sales revenue. I'm going to credit sales taxes payable. For the 120,000. And what we would do over here is we would call this to adjust sales, or sales tax, to adjust sales, to separate sales taxes collected, or sales taxes. That's what I would call something like that. Okay, so that would be the first thing you'd want to do here. Let's go through and do the same thing for our other question up here. So this one over here, the reported sales revenue for the year is $2,181,480. So the amount of the sales revenue, if I divide this by 1.06, I get $2,058,000. So the amount I would need to go through and adjust is going to be $123,480. So my journal entry that I would be going through and doing for the problem that Zarina would like me to do, that apparently someone didn't have enough time for you, Zarina, but I do have time for you. But I do also have time for Creamistry, which you got to totally hook me up. I'm going to bring my kids, I'm going to bring their volleyball team, and you're going to totally hook me up. So coming right over here, we've got this sales taxes payable. The names have been changed to protect the innocent. So we've gone through and we've dealt with this part. Now let's do with the second part of this question. So the second part here is, they said that the sales tax, because the sales tax is forwarded to the State Department of Revenue, the sales tax expense account is debited. Here's another problem, right? We don't really have a sales tax expense, right? It's not going to be recorded like that. So here we have sales tax expense, and the sales tax expense prior to any adjustment was $103,400. The reality is this account should not have any balance at all. When we remit sales taxes, we're debiting sales taxes payable and crediting cash. This needs to have a zero balance. So I'm going to basically credit sales tax expense for $103,400, and I'm going to go ahead and debit sales taxes payable for $103,400. Now, what this is going to give me is this is going to give me an ending balance in terms of my liability for sales taxes payable of $16,600, which represents, I had a payable of $120,000, I remitted $103,400, so I still owe $16,600. So over here, my journal entry for this is I'm going to go ahead and debit sales taxes payable. I'm going to debit sales taxes payable for the $103,000. I'm going to be crediting sales tax expense for that amount to properly adjust sales taxes collected or paid. Okay, so let's go over here and bring this amount over here to our T account. So over here for Zarina's question, basically said we had $106,580 of the amount of sales tax expense. So this over here is we would have $106,580. And so this would give me an ending balance in my sales tax expense, or my sales taxes payable, of $16,900. So the other journal entry that I would need to go through and do would essentially be a copy of what I just did over here. So I would have over here sales tax expense. And this amount over here would be for what this question told me to go through and do, or at $106,580. So that's this particular question, Zarina. So hopefully this helps for your upcoming final exam. I always have time for my former students, and for any of you subscribers that are out there that you would like me to go through and work through a problem, I'm more than happy to do so. And again, but I want to thank Wiley. I also want to thank you for liking and subscribing. And I look forward to seeing you on future videos. Have a great day.